So there are three really big things happening in the three biggest economies in the region right now. One of them is China, which is what you've just mentioned. And there are some positive things happening in China, and there are some things which still need to be seen. So the positives, we've seen a tepid but an uptick, but a tepid one in consumer confidence. We've seen a marked positive shift in the regulatory environment to be more pro-business. And of course, valuations are extremely cheap in China. Now, what we've been waiting for is an underpinning of the real estate sector, because that's the next step, which will just shore up the financial system, where we think there's no widespread risk, but it's clearly a bit of a headwind, and that will also just reassure consumers. So that's the next thing to happen there. But then in Japan, we've got something very, very different happening with the corporate governance reforms, which have been building for a decade now, and we think are very, very meaningful and will be long-lasting. And then in India, we've got something quite different happening there again, with an overdue capex cycle, which is really transforming parts of the industrial sector. So there's actually quite a lot to be excited about in different ways in this part of the world.
Yeah. Indeed.
Yeah.
I just want to, because Sam was making the point earlier on about, and we were having this discussion actually with Lin as well, in terms of SoftBank doubling down on its AI investments. And I wonder, how far has China come when it comes to AI development? Because the first round, it seems the US has won, but people are saying don't write off China just yet. And so on that front, as China steers towards balancing its economy more towards new tech and new technology-enabled practices, what would that mean for China?
Sure, well, you should never write China off, and that's totally clear. But I think that AI in China has got a couple of local characteristics. The first is that, despite their efforts, they don't have the most cutting-edge chips that you can get in the US, for example. And the US is clearly nervous about giving them access to those. And so that's some degree of impediment, which will take some time to change. The other thing, of course, is that the Chinese government's intervention in what AI is able to do is different than is the case in the West, for example. And so I think that Chinese AI will pursue its own flavors, its own path. There's quite a lot which is interesting in technology more broadly in China, and of course this desire for self-sufficiency is behind a lot of that. But quite often that's maybe a little bit further down the supply chain rather than really bleeding edge technology.
Alexander, I just got back from Shanghai where I was at an AI conference, and I hear what you're saying, and the likes of Huawei are still pretty confident in the face of some of those US pressures. Yes, of course, it has hampered some of their progress, but I mean, they surprised the market still with an advanced chip in that phone last year, so that's quite remarkable. But I want to circle it back to the original point you made about the consumer. And yes, everything leads back to the property sector, and perhaps that will give consumers a little bit more confidence. But how are you joining the dots between this self-sufficiency drive, the AI, the new productive forces, and the Chinese consumer? Because this is where they want to create the jobs and absorb some of that employment, with the youth unemployment running at a record high. But that is going to take some time, and that's when the consumer may actually feel good about their long-term income expectations.
Well, so you need to divide up the population, you need to divide the economy up into its constituent parts. And of course, China is a huge economy, so you can have more than one thing happening at once. And you're right that youth unemployment has been a concern, but for the slightly older professional classes, wealth levels were never the issue. The issue always has been their desire or their proclivity to spend their pent-up savings rather than feeling somehow that they were, they didn't have enough money. And so a combination of their most valuable asset, which is to say their apartment or their home, then retaining its value, and a bit more job security, which we're seeing in certain parts of the market, might encourage people to start spending some of the savings that they built up through COVID.